Welcome to another episode of Blockrevision, and in today's topic a bunch of news about economy, stock market, commodities, about different types of economic cycles. So there will be much to learn and much to ponder about. So hopefully you find the episode interesting. So let's start. And we are starting off with economy view. And let's head to home sales chart. So this chart showing the existing home sales that may reverse course as mortgage rates take off. So home sales are a very important leading indicator of whether we are going through or rather heading to recession or rather the boom period in economy. Right now we are finding out that this exactly chart, this curve of existing home sales are following this 30-year fixed rate mortgage. So right now, as we can find that we are just heading on a 30-year fixed rate mortgage, very high levels. There might be a slowdown being seen during next period of time. There's one of the indicator that may prompt us to think that it's still some clouds to come over the housing market. Right now, let's get a finding from cross-border capital that found that world commodity prices and Chinese People's Bank liquidity index is showing some of a correlation. So previously we've seen whenever there was a spike on China PLC liquidity index, right after CRB index were also been hiking. Right now, as you can find, the liquidity of Chinese bank has slumped, and that might be one of the leading indicator of something that we may also see kind of a drawdown on commodities index, as everything stems from not this but that global liquidity cycle that also finding been introduced by cross-border capital that shows up that 65-month wave correlates with GLI. So global liquidity index is moving in waves seen 70s, and that means that after this liquidity been taken out of the table, we may see another liquidity boost, but it's still yet to come. So the worst might be still ahead. Right now we are just heading into a possibly another full very important time of a economic bust. However, that's some exceptions to this rule, as it was for instance right back in 90s, where we were going through a very strong boom cycle when we have just reached 40 points of index of GLI. So might it happen this time? It will be very difficult, as QT quantitative tightening had just started. So we should rather see a liquidity being drop still to the low 30s or even 20 points, and right after there might be another boost that may prompt the economy further. So it looks like we might be heading a recession, but we still haven't crossed that psychologically important level on S&P 500 of 20%. That if we just cross it, it will make some longer-term investors to come out of this stock, this bull stocks rally, and eventually lead to some major, maybe even major capitulation in times ahead. As P ratio right now is at 20 points, that's very similar to where it was. So we are getting very close to where we were back right after global crisis back in 2000 and also 2008 and 9. So this P ratio is pointing that market is very highly sold off, but it doesn't mean we can't go even lower. So we may get lower, but this very bearish exposure, systematic exposure on S&P 500 is showing that we may go through some squeeze to the upside that may lead to some major growth returns in months to come, even if it's June, as the first half of 2022 was so much negative that we may see a correction of that sentiment. So the key fundamental call we are focused on right now is slowing growth. The slowing growth is prompting this P ratio lower, but everything goes to earnings estimations, as the earnings estimations will recover as right after this we will find a possible rebound. The fact that we are right now in a quite kind of a very tough times for the stock market is that we are right now suffering from a lack of new IPOs coming to the market, and also IPO volume has tumbled this year to the levels not seen since at least 2017. So the one thing that may make think us that it's not over is that the media has typically never seen a bear market or recession in advance of one happening. So that's likely we need at least a decent reversal to get the majority of investors back into bullish camp first. So given this all biggest spreads on whether we go in north or south, I still remain quite positive on possible good returns from US indexes. So right now very bad news might be already baked in the cake. So I think we could call the bottom in stocks, which appears that is rather likely we shouldn't get another very high interest rate hikes over next coming weeks. However, the very important gauge to watch will be the gauge that will be presented on a Friday, that is CPI, and afterwards we find out what the possible whether it will be possible for Fed to make a pivot in terms of its policy. Right now, let's get to crypto outlook, and let's have a finding that recently been very broadly presented around the crypto investing world. So right now the performance of cryptocurrencies in comparison to each other is that we are suffering a very strong sell-off with every single type of asset being in a negative territory, and the lowest negative return is obviously on Bitcoin, and that's minus 10.49%. However, in terms of ETFs, crypto ETFs, I would like to take a notice that neither of them has brought a positive return. So how investors might be bullish in coming months? First, I would rather observe the possible a reversal on a crypto chart of Bitcoin or Ether that may prompt retail traders to join the bandwagon. But without this, I don't find there might be any of investors really interested into this market, and the possible next sell-off might be on the way ahead. So will it be over? We'll see. However, there are some positive news, such as Lightning Network capacity that is still increasing. So fundamentally, Bitcoin is on the way forward right now. A chart shows us cumulative Bitcoin capacity across all channels, and we are finding that this makes Bitcoin more attractive for new users, as there might be more lucrative to send micropayments between users on the way ahead. So there is still to be done. However, fundamentals of Bitcoin still going forward, and we may see maybe Lightning Network usage, bigger adoption during the next bull cycle, possibly right after next halving in 2 years. So let's now have a look at market mover section, and this week is quite interesting for the economic world. So on Tuesday we already have tomorrow RBA interest rate decision, and possibly Australia's GDP expansion has building case for further rate hikes. I do expect this one to move it forward, as we are there are no any signs of a possible recession. Australia is one of the strong economy with a strong commodities foundations, so RBA will possibly hike its interest rates tomorrow. Afterwards, and right after, we have ECB press conference. From China we have inflation rate, but it's still expected to be at low levels. However, after this lockdowns to be eased, we may find that inflation rate will also have its boosted ratings. On Friday we have very important gauge that is from USA, core inflation rate and inflation rate year over year, and this one is in a best scenario to be aligned with two previous gauges. Nobody nearly bets that may get lower to 7.9%, especially with fuel oil prices being increased and also summertime approaching. Right now let's have a look at trade idea section, and we have for today US 100, the proposition from me. So right now we are really struggling with getting through this 12,800 low 800s level. So it means we've recently been rejected on those levels, and also has failed to tackle with the selling been set right at this point. So with those many bearish rejections, and with this one swing failure pattern, a bearish swing failure pattern, we are more likely to get lower rather than higher. We're trying to find a base, but it means right now with this price action there is a higher possibility of getting lower. So I would observe this exact area, this area of I would maybe sign it by a box, this area right here. If we won't jump from it firmly when claiming this once again, I would find US 100 to get lower once again to the levels of 1100s low 1100s. So for me, there's a very interesting to watch the area of this one, and if the price will get to this level of 12,500, I would watch the price action, whether we are jumping very firmly upwards, just sliding through this level. If we find a slide, there is a higher chance that we will just get lower to the levels that have been seen back in second half of May. So right now I don't make any firm stance whether we are going upwards or downwards, but I do find there are many of premises that we might be heading lower right after this area being claimed. So possible area of a trade, of entering a trade, is around within this box. If we won't hit this box and we won't make a slide around here, if we won't stay here for a longer time, for at least a couple of hours, I won't find this proposition of a trade as being valid. But right now I do find that the US 100 are more likely to move downwards rather than upwards, and that may be verified by the market within next hours or days. Alright, so this is in today's episode. Thank you very much for watching. With any question, just remember to put them into the comment section below the video, and see you tomorrow.